is the USOIL. And we're going to be reviewing what has been happening here since the beginning of the week. So the week started on a bearish note as we saw our price action broke down the $80 level, a very significant structure which we identified on the daily time frame. If time permits us, we shall be looking at the daily time frame one more time so that you can see what how important that structure is if we take it into consideration with the market structure. So the week started on a bearish note here as we were able to join the breakdown of the $79 level. Remember, at the beginning of the week we had a resistance point here at the $80.50 level. Then we had the support level for the channel at the $79 area, and the signal we were looking forward to is either price breaks out of the channel to the upside to signal a bullish momentum, or price breaks down the support level of this channel at the $79 level to incite a bearish momentum. And in fact, the later is what happened here as we saw the breakdown retest of the $79 level, which gave us an opportunity to join that decline to the downside. And in fact, price action moved about 230 pips in our favor before we saw this bullish momentum that began right above the $76.40 level. Then on Wednesday we also had an opportunity as we saw selling pressure around this area, and we were looking forward to two expectations here. The first one is if bullish momentum continues here to the upside, we're going to be joining that bullish momentum. And in fact, we joined that bullish momentum and it gave us about let's see how many pips was that. We had about 50-60 pips thereabouts before this bearish momentum happened. And remember, we were expecting a breakdown of that structure to happen just in case the bullish momentum isn't strong enough, and this is exactly what happened here. We had our sell stop triggered at the $79 level to incite that bearish momentum to the downside, and price moves in our favor in that regard as well, as it moved about 260 pips in our favor before we started witnessing this consolidation phase around this area. And in fact, during the live session yesterday, we were around the structure here at the $76 area, where I said price action falling into this channel here between the $77.40 area and the $76.40 level could transition to either a reversal pattern or a trend continuation pattern. And what do I mean by that? So I laid emphasis on the fact that if price breaks out of the $77.40 level, we might likely be seeing a reversal pattern to the upside. Then we could join right above that $77.40 level. However, if price action breaks down the $76.40 level with selling pressure below the structure, it will be a beautiful signal for us to join a trend continuation pattern. And in fact, in the last 24 hours, we saw the breakdown of the $76.40 level. In fact, price action did a couple of retests of that structure to further give us a signal of a bearish momentum at that point. Though we joined the move to the downside there, and since price broke down retest the $76.40 level in the last 24 hours, price has been caught within a consolidation phase. And at this point in time, if you are in that trade right below the $76.40 level, you will currently be running with about 40 pips in profit. Now that we are going into the New York session today, what is really going to be our plan? What are our expectations based on this current structure? Well, the first thing we observed here since the beginning of the week is the fact that price has been very bearish, and as a result of this, if we connect the series of lower highs here, you can see that we have a beautiful trend line which has been guiding this bearish momentum. As you can see, we had the first touch here, we had the second touch around the $80 level. Then on Wednesday we saw a little consolidation phase right above the $79 area, evolving into a reversal pattern that finally broke down the $79 level, respecting that bearish trend line one more time to push price to the downside. And since price has tested the $75.60 level here since the New York session yesterday, we have been witnessing some buy pressure around that area, giving us a signal that buyers are likely negating all selling attempts to break the $75.60 level further to the downside. So with this kind of situation we have here, we have a little consolidation phase here, which is a beautiful signal that there is an indecision in this market. Hence, we want to be anticipating a breakout of the structure to either side to be able to take advantage of any trading opportunity during the New York session today. And what are we going to be looking forward to be part of this trading opportunity if we really want to be trading the US oil for today? Well, if we look at the structure here, we already have a channel which I've identified already, and that is the $76.40 level. As you can see, since the breakdown of the structure during the later part of the New York session yesterday, we have been witnessing some rejection of that area, giving us a sign that there is some selling pressure around that area. And also we have the support level for this channel sitting around the $75.60 level, where we have been witnessing some buy pressure coming in from that level. So for those who are taking advantage of this bearish momentum here during the course of yesterday's trading session, I would advise you to move your stop loss to break even right now, as anything could actually happen from this point. And if we take into consideration the buy pressure we have been witnessing right above the $75.60 level, as you can see, sellers are unable to break down the structure in the last 24 hours. It's a beautiful signal that we might be having a bullish momentum going forward. So how do we intend to trade this as we head on into the New York session? Well, the first thing I will say here is that you all know that from a technical standpoint, whenever we have a channel like this, all we want to be doing is to remain patient and wait out for either a breakout of the channel or breakdown of that channel to give us that signal that we are looking forward to. So during the New York session today, we want to be seeing either a breakout of the $76.40 level to give us a signal of a possible bullish momentum at this point. And if a breakout of the $76.40 level happens and price action continues to the upside, there are key levels here we want to be taking into consideration while we guide our position accordingly as we continue to monitor price action. And one of the structure is the $77.40 level. Remember how this level has been a major determinant of price action during the course of this week. We saw the breakdown of the structure here. We saw some selling pressure around this area, and if price breaks out of the $76.40 level with buy pressure above that level and price action continues to the upside, as soon as it tests the $77.40 area, we want to be moving our stop loss accordingly to lock in some profit. And the reason why we are going to be moving our stop loss is simply because of the fact that we need to understand what is really going on around the $77.40 level. We want to see how price action will be reacting to that structure to decide if we are going to be adding more position to our existing buy position, or we might be getting ready to join a decline from that level. And if you look at that structure critically at the $77.40, you can see that it shares a beautiful confluence with the bearish trend line that we identified earlier to be a critical confluence we need to look out for if price action ever breaks out of the $76.40 level. So if a breakout of the structure at the $77.40 level happens, followed by buying pressure above that level, we shall definitely be looking out for buying opportunities to add more position to our existing trade. So that is what we are going to be looking forward to buy the US oil. However, if price action drops further to the downside, breaking down the $75.60 level, that will be a beautiful signal that the sellers have come to stay here as they take out all the buy position around this area, gather some liquidity, which we shall be seeing as selling pressure right below the structure for us to be adding more position to our existing trade. So we have a simple setup here which we can use to guide our trading activity for today. So for those, I told you, for those who are taking advantage of the sell position right below the $76.40 level, kindly move your stop loss accordingly, lock in some profit. And I have advised that we move our stop loss to our entry point here at the $76.40 level while we continue to monitor price action, waiting for that signal to happen, which is definitely going to come in the form of either a breakout of this channel to the upside or a breakdown of this channel to the downside for us to either buy or sell the US oil for today. So that is my view here on the US oil. It's quite a simple setup, so I hope that you screenshot my screen so that you can use them as a reference point when you are about to make your individual decision on this pair. If you have any questions regarding what I just explained so far, you need further clarity into a particular aspect, feel free to drop your inquiries in the comment section, and be rest assured that I will be willing to be of help in that regard.